Today is April 12, 1:06 p.m., and we saw some unusual options on Datadog, ticker symbol DDOG. It has rallied 5% as of now, and it has come out of this over sold condition on the Williams percent R indicator. So will this continue to go up, or will it drop back down? Because it has also fallen from this indicator before back down, as you can see. So without further ado, let's take a look at the unusual options, and then we'll suggest a different trade idea actually that we did from the unusual options. So we saw this just 20 minutes ago at 12:45, right? So make sure you hit the bell icon so you get notified right away when you see these unusual options. So we'll report them. You'll get notified. And then, for example, this one just 20 minutes ago, 2,000 contracts here, all at the 65 strikes. And you'll see here when we open that up, take a look, May 19. Here it is. These are the volume here, 2,183, and here 2,170. These are all greater than the open interest, you'll see. So these are all opening orders. We believe that what they're doing is they are selling the 65 puts and then buying the 65 calls. So this is a synthetic spread. And when you analyze this, this is bullish. So we're at 68. As the price goes up on the x-axis, the profits increase, just like having the stocks. You'll see here the profit loss on the Y diagram. So this is a bullish trade, just a very slight negative theta, but the delta is 100, just like owning 100 shares of DDOG, except you don't. It takes less capital using these synthetic spreads. Okay, so we think that's what they're doing. They're anticipating that. And so our trade is a little different because doing a trade like this is selling that 65 puts takes up a lot of capital. That's like saying you're willing to own 100 shares of Datadog. So that's at $65. So 100 shares, that requires $6,500 per contract. And since they did 2,000 contracts, this was a $13 million trade. Okay, so this is definitely a large institution putting this trade on. And so we did something different, so it doesn't require as much buying power. And so what we did was we took the May 5s and we sold the 75 strikes. And so here we are. And then what we did was in the Junes, we bought the 70 strikes. Okay, so here was our position. You'll see that. And so if you were to do this, you can analyze it. It is also a bullish. Take that off. And so you'll see here it also profits as it goes up. This profit goes up as well. And so the good thing about this is that if we look at the Greeks, you'll see that it is a positive theta. And that's what we like about this. And so if you really want the 100 delta like the other trade, then you can buy 5 of these, right? And then you get 100 delta. And so that's up to you on what you like to do with your account. But that's the trade where it takes less buying power. It's going for $4.30. And so this has time to play out, and it is and so it is bullish. So and now it's at 5.5% now. So since So we think this is in the long run, yeah, it will be going up. And keep in mind there is earnings sometimes around, let's see, this is May 10. Okay, so right about May 10, you'll see here our option to sell is around that time. So that's around that time we can decide, should we close that position or not, right? So gives us that chance to decide what we want to do, or we can also then roll that position to another strike. So that's our analysis on DDOG. So if you found value, please give us a like, comment what you think, helps our channel grow, and subscribe and hit the bell icon. You'll be notified whenever these options come up, and we'll report it to everyone that is subscribed. Thank you and take care.